first number for CA, Intergroup 1, Cost and Management Accounting. Question number 1. So, you have to find the production mix based on the limiting factor. So, key factor or the limiting factor for the product of X, Y and Z, and the contribution per hour is to be calculated, and ranking. So, endukku adhigamana contribution irukko adu and order la we have to rank descending order. So, after that, what is the existing hours அப்படிங்கிறது நமக்கு தெரியும். So, நம்ம எந்த பேசிஸ்ல வந்து ranking பண்ணிருக்கோமோ அந்த பேசிஸ்ல you have to allocate the available time. So, first one the product X, then product Y, the next best, and whatever the balance available other product Z கொண்டு போய் போடும். So, the answer is here the answer, the statement showing the contribution. So, 12,000 units of X and 16,000 units of Y and 9,600 units of Z. So, the total contribution 28,48,000 அப்படிங்கிறது இதோட solution. Question number 2, state the limitations of budgetary control system. So, theory question. What are the various limitations? So, budget is generally based on estimates. And the next factor is that it is time factor. So, it is either for a short-term period of time or the medium term. So, time constraints are there. And third is cooperation of the staff employed is required. Then it is implementation is expensive. Then it is not in substitute for management. And finally, rigid documentation is required. The next one is question number 3. Question number 3, the details of manufacturing concern is given. And here you have to prepare a flexible budget. Okay. So with the existing capacity and you have to prepare a flexible budget for 75% and 100% capacity. And variable expenses specifically mentioned material, labor and others. And then fixed expenses mentioned wages and salaries, rents, depreciation and administrative expenses. So இது இல்லாம semi-variable expenses are there. So semi-variable expenses நாம பிரிக்கணும். So அதுக்கான hint நமக்கு இந்த questionலயே நமக்கு என்னங்கிறது இருக்கு. Semi-variable expenses remain constant between 45 and 65, whereas it is increased by 10% between 65 and 80, and 20% between 80 and 100. So in the basis you have to calculate the semi-variable and sales minus you will get the profit. Okay, for 75% that is a loss of 90,38,000, and for 100% it is 3,64,000. Then explain flexible budget. So flexible budget it shows the expected results of a responsibility center for several activity levels. Okay, so 2 more questions. Then question number 5. So question number 5 of the Varco, they have given some data of the production and variable cost per unit 16, fixed cost per unit is given, and the company fixes its selling price reflects a profit of 20% on the total cost. So now you are required to calculate number 1, the present break-even point, PV ratio, and revise the break-even sales if the selling price is reduced by 10%, and revise the sales if the company desires a profit of 20% more than the budgeted profit and the selling price is also reduced by 10%. So the answer is for A, present break-even sales, the answer is 24 lakhs. Present PV ratio 33, 1.3%. And the next is revised selling price will be 21.60. Okay, so this is a calculation And the final answer for question number 3 is revised break-even point 30,85,711. And then D. The final answer is revised sales in rupees 67,88,578. And in units 3,14,286 units. Then question number 6. So question number 6, we have the variance. You have to calculate the overhead variance, fixed overhead, variable overhead, fixed overhead volume variance and expenditure variance, and calendar variance. So this is the basic calculation and working notes. And then overhead cost variance 45,200 adverse. Fixed overhead cost variance 34,320 adverse. Then variable overhead cost variance 10,880 adverse. Fixed overhead volume variance 21,800 adverse. Fixed overhead expenditure variance 12,520 adverse. Calendar variance. So, ரெண்டு மெத்தட்லயே நம்ம calculate பண்ணலாம். The answer will be 5,450 adverse. So that's all for CA Group 1. Next, CMA Group 1, Paper 8, Cost Accounting. Question number 1. Paper 8, Cost Accounting. Question number 1. So while under what conditions will the profit under absorption costing be higher, equal to or lower than the profits under marginal costing? So generally it will be higher than in marginal costing when closing stock is more than the opening stock. And it will be equal when both opening and closing stock are equal, and it will be lower when the opening stock is more than the closing stock. Question number 2. Write a note on performance budgeting and its main concepts. So performance budgeting, it is the responsibility of the various levels of management. It is predetermined in terms of either the output or any other results, keeping in view the authority listed with them. So what are the main concepts enumerated there? So at least for 4 points edina podumanadu. It is based on the classification of managerial level, based on the performance at a different levels of management. The starting point, it rests with the organization chart. And the cost in each individual or department budget should be limited to the cost controllable by him, and the person concerned should have the authority to bear the responsibility. Then question number 3. You have to prepare the sales mix. So the marginal profitability statement is given for product X, Y and Z. So contribution per unit is calculated as 7.8, 5.6 and 12.6. So contribution per kilogram of raw material, that is the limiting factor. It is 11 per limiting factor. So highest edu are the first 14 la irukku. So adanal in the product Y தான் first varanum, X is second and Z is the balance. So இப்போ மறுபடியும் நம்ம ஒரு ஸ்டேட்மென்ட் போடுறோம். So first Y. So the max and demand units is given and suggested production. So based on the availability and the calculate பண்ணோம்னா the contribution is 33,600. So மிச்சம் என்ன இருக்கு அப்படின்னு பார்த்தோம்னா Y and Z ல X. So the demand is 8,000. Okay, and raw material consumption போட்டோம் அப்படின்னு சொன்னா 62,400. The next is Z. So எது balance available இருக்கோ 2,400 is the balance. So in the 2,400 balance you will allocate to Z. So the total profit is 66,160. Then question number 4. So the capacity for a production overhead cost for 60% and 100% கொடுத்திருக்காங்க. You have to calculate it for 80% and 90%, and then you have to compute the total cost, both fixed and variable overheads per unit. இது எல்லாமே calculate பண்ணணும். So working notes பொறுத்த வரைக்கும் you have to calculate the maintenance cost. Variable will be ₹2 per unit and fixed will be 25,000. Power and fuel variable will be ₹2 and a fixed will be 50,000. So now the workings, capacity for 80% and the 90%. So 80% of the total is 5,45,000 and 5,72,000 500. This is for 90%. So next one is question number 5. The sales data for 2 years 15-16 as well as 16-17 is given for PV ratio and margin of safety as a percent of total sales. So you have to find the sales for 16-17, break-even sales as well as the fixed cost. So the answer is sales for the year will be 8 lakhs. Break-even sales will be 6,25,000. Fixed cost will be 2,34,375. Then question number 6 is with respect to the standard costing, material cost variance. So this is the answer. So this is the table for calculating the standard cost, actual cost and revised standard cost. So material cost variance 79,000 adverse. Material price variance 59,000 adverse. Material quantity variance, it is 20,000 adverse. Mix variance, it is 52,727 favorable. Yield variance, it is 72,727 adverse. Okay. So that's all with respect to CMA Group 1, Paper 8 Cost Accounting, and CMA Group 2, Paper 10A Cost and Management Accounting. So calculate the margin of safety from sales, fixed expenses and profit. So formula apply பண்ண வேண்டியதா, answer is 12 lakhs. Question number 2. Calculate BEP in rupees and profit if the sales volume is 50,000. So first BEP க்கு answer வந்து 7,20,000. And the next one is sales volume is answer is 5,20,000. Okay. Then question number 3. So rent capacity 90% and 100% is given, and that is an export price for 1,500 units. So on the decision making kaha kuduthirukku. So the answer is showing the differential cost. Statement showing the differential cost of 1,500 units. It is the differential cost is 97,267, and for per unit it will be 64.84. So the minimum price should not be less than this 64.84. Then question number 4. transfer pricing. So the answer, it will be 52 lakh and 20,000 with an incremental cost of 72. So this will be the savings. So the manager should accept. Question number 5. So question number 5 பொறுத்த வரைக்கும் ஒரு சில what is the current scenario is given and the production manager, sales manager அவங்களோட proposals இருக்கு. So இந்த proposals எல்லாத்தையும் நம்ம consider பண்ணி calculate பண்ணணும். So the first thing is you have to calculate the contribution and profit under current scenario. Okay, so this is the total fixed cost. Profit percentage தெரியும். So by which we can calculate the total fixed cost 80,000. Okay, so the first one is the central administration said that there should be a reduction in the fixed cost by 12,000. So what will be the profit? So this is the net profit calculated. Okay, 32,000. Anticipated profit is 20,000. So that will be an increase of 12,000. And similarly for the next one, it will be profit will be 40,000. In a control, variable cost is reduced by 1 per unit. So 40,000, 20,000 is anticipated. So 20,000 increase. Third case, 20% increase in sales with a 5% reduction in the selling price per unit. So your profit will be 16,000, but the expected profit is 20. So there will be a loss in the proposal right now. And the next is 10% increase in selling price with 5% reduction in sales units. So here it will be 53,000, but your anticipated profit is 20,000. So 33,000 ஜாஸ்தி ஆகுது. So அதிகமா ஆகிறதுனால you will accept this proposal. So this conclusion, suggestion, recommendation, whatever it is asked. So அதை கண்டிப்பா எழுதணும். That is also a part of your answer. அதுக்கும் சேர்த்துதான் மார்க் உண்டு. The question number 6. So similarly question number 6 அப்படிதான். Finance manager, sales manager and the production manager. அவங்க மூணு பேரோட suggestions நம்ம consider பண்ணி we are calculating the sales, selling price per unit, contribution as well as the profit. So additional units எவ்வளவு பண்ணணும் அப்படின்னு. So first for the finance manager, PV ratio 15% வருது. Okay, and break-even point is 20,000. So additional 10,000 units to be sold to break-even. And for sales manager proposal, profit calculated is for 5,000 additional கிடைக்குது. PV ratio is 20,000, 20%. இவங்களுக்கு additional sales வந்து 10,000 பண்ணணும். The third thing is the production manager. So அவரோட proposal accept பண்ணானா you get a PV ratio of 17.52. And additional sales volume will be 10,000 as well as a profit. Profit வந்து இந்த கேஸ்ல எவ்வளவு வருது அப்படின்னா the reverse sales is 20,000 units. Contribution is 34 and the profit is 4,000 units. So இது எல்லாத்தையும் விட அதிகமான profit எதுல கிடைச்சிருக்கு நமக்கு அப்படின்னு சொன்னா sales manager ஓட proposal. So that's why we will be accepting the proposal of sales manager. And you have to write that recommendation and why you are recommending that அப்படிங்கிறதுக்கும் அதில் explain பண்ணணும். Okay. So that's all with respect to the review of test 1.